Hello everyone, it's JT right here, and in this video we'll be continuing the free SLK series I started on my YouTube channel this year, right? So we'll be continuing from where we stopped. I know I've not been consistent with this particular series. It's because I've been loaded with so many commitments, right? And I apologize for that. I sincerely, from my heart, I apologize for that. So we want to start. We've done the structure part. SLK means structure, liquidity, and key level. So we've done the structure part of the SLK series. We've done both basic market structure and advanced market structure. We've talked about liquidity also, right? But in this particular video, we will be talking about key levels. We'll be talking about key levels, right? So without any further delay, without any further ado, let's just commence. Let's get the party started, right? All right. So what are key levels? What are key levels? Key levels are levels that act as a turning point in the market for price. So when we are talking about key levels, we are talking about levels that are able to shift price or turn price to the intended direction it wants to go to, right? So that's basically what key levels are. So many traders, or some traders, they tend to call these levels, they have different names for these levels, right? So some traders call it their area of value. Some traders can call these particular levels their points of interest, but that doesn't matter as much as you know what you are doing. So we could also say that key levels are areas of value or points where we are interested in either buying or selling the market from. So these are points, these are levels that act as a turning point for price, right? That's what key levels are. And we have three types of key levels. We have the A-shaped key levels, we have the V-shaped key levels, and we have the open-close key level, right? So the A-shaped key level is more like an A-shaped, right? So when we're talking about the A-shaped key level, something like this, the key level is A-shaped, right? It's A-shaped. It has the shape of an A. When we're talking about the V-shaped key level, the V-shaped key level have the shape of a V. Then the open-close key level, we have two types of open-close key level, which is the bullish and the bearish open-close key level. This particular first level here, this particular one is an open-close key level, the bullish open-close key level, while the second one is what the bearish open-close key levels. As the name implies, right, the bullish open-close key level is actually formed by two consecutive candles, two consecutive bullish open close candle to the upside, two consecutive candle to the upside. So the open and close of that particular candle is the bullish open close key level, right? So for you understand the basic should I say idea behind the opening and close of a bullish candle. You understand the idea. A bullish candle opens below and what close above, right? So that is the close of the candle. A bullish candle opens below and close above. So this particular down of this second candle, this is the close of the candle, while this is the open of the candle. So that's why it is called what? Open close. So bullish open close. Do you understand now? Then this one for the bearish open close candle, you understand how a bearish candle opens and how it closes. A bearish candle opens above and close what? Below. opens above and close below. So that's why it is called the open and the close, where the two candles, where they meet together, where the point where they meet is your key level, right? So for the A-shaped key level, the A-shaped key level is a key level that is used for buys until it is proven otherwise. So for our A-shaped key level, what is the idea behind our A-shaped key level? How do you know? Okay, before that, let me just tell you what an A-shaped key level is used for. An A-shaped key level is a key level that is used for sales, rather. So sorry for that mistake. So an A-shaped key level is a key level that is basically used for sales. The V-shaped key level is a key level that is basically used for buys until it is proven otherwise. The bullish open close candle is used for buys until proven otherwise, and the bearish open close candle is used for sales until it is proven otherwise. I'll explain what I mean by until it is proven otherwise, right? That's not a big something. That's not a big deal. It's not a big English, right? So how do you know an A-shaped key level? First of all, how do you know an A-shaped key level? For you to be able to know how an A-shaped key level forms is that you need to understand candles, right? Bullish and bearish candle. For an A-shaped key level, an A-shaped key level is formed by two candles like this: a bullish candle to the upside and a bearish candle to the downside. This is how an A-shaped key level is formed. So I'm sorry. Okay, let me just change the color. Let's see. Let me change the color so that you understand what I'm doing. Let me just change it to something. So sorry. So 7% before. So sorry for. Okay. Right. So an A-shaped key level is formed by two consecutive candle or two candles to the upside, right? So a bullish and a bearish candle, right? So this particular level is the key level, the A-shaped key level. So we'll call this our A-shaped key level, right? Then a V-shaped key level. How is a V-shaped key level formed? A V-shaped key level is formed by two candles also, right? A bearish candle to the downside and a bullish candle to the upside, right? Something like this: a bearish candle to the downside, then a bullish candle to the upside. Let me change the color of this. Right? So the V-shaped key level is formed by a bullish candle to the downside, then a bearish candle to the downside, then a bullish candle to the upside. I'm sorry for that particular notification. So sorry for that, right? So that's how a V-shaped key level is formed. I told you what an A-shaped key level is used for. Basically, an A-shaped key level is used for sales in the market, right? Until that particular key level is proven otherwise. For instance, we want to see price get to this particular level, right? I want to see price get to this particular level and sponsor some sales to the downside. That is what an A-shaped key level is used for, right? We want to see price come to that particular A-shaped key level, then sponsor sales to the downside. So, but for this particular video, right, we have key levels that can also act as a turning point in the market, but these key levels are key levels that have been disrespected. So I want to explain what I mean by until it is proven otherwise. You know what I said by an A-shaped key level is a key level that is used for sales in the market. All right, for instance, when we have something like this, I said until it is proven otherwise. What do I mean by proven otherwise? For instance, we want to see price sell from an A-shaped key level, right? We want to see price approach this particular key level, right, and what sponsor some sales to the downside. But in this case, what we see price do is that price comes to this particular key level, reacts a little bit from that key level, then what we see is that price breaks this particular key level to the upside. It breaks with an impulsive candle and it closes above, right? It closes above that particular key level. This key level, although it has been invalidated for sales, but this key level is still a very much legit key level and a very accurate key level to use for buys. It's no longer valid for sales, but it is now valid for buys. So we could be expecting price to come back to this key level and what now sponsor some buys instead of what sales. So that's what I mean by an A-shaped key level is a key level that is used for sales until it is proven otherwise. So the process whereby this bullish candle breaks above that particular key level, that particular A-shaped key level, is now what has now made that particular key level an invalidated key level for sales. It is now what very much valid for buys. Are you getting it? So same thing for the V-shaped key level, right? So for the V-shaped key level, we want to see price return up, sponsor some buys. We want to see price drop to this particular key level, to this V-shaped key level. Then we want to see price sponsor some buys to the upside, right? So that is the basic use for V-shaped key level. It is a key level that is used for buys, but in a case until it is proven otherwise, but in a case whereby price comes to this particular level, price comes to the V-shaped key level, right? We see price comes to the V-shaped key level, right? Instead of this key level to be used for buys, right? Instead of this key level to be used for buys, we then see price invalidate this key level to the downside, right? We then see price invalidate this particular key level to the downside. That doesn't mean that this key level is no longer valid. Yes, this key level is no longer valid for buys, but it is now ready for what? Sales, right? So we want to see price come back to this particular same key level, and we want to see this key level used by price, right, to sell to the downside. So that is how it works. So even on the same vein, once we are now expecting buys from this particular key level, right? So on the same vein whereby we see price come back to this same key level, right? Instead of price now buying from this key level, it now break to the downside. We'll now be expecting sales. Same thing for this key level, but in this particular video, I'll be basically talking about this A-shape and V-shape key level. But in the next video, because this key level video is divided into two parts, right? So I'll be talking about disrespected key level in the other video, how you could use disrespected key level to either buy or sell. Are you getting it now, right? So this key level video is divided into two. Then for the bullish and the bearish open close candle, basically just same thing, just the same thing, just same thing. These things are repeatable, they are repeatable stuff, right? So for the bullish, just as the name implies, bullish open close, bullishness means to buy, right? So we want to see price buy from this particular level, from the bullish open close key level, right? We want to see price come to this particular key level and sponsor some buys to the upside. Do you get it now? Until this particular level is what proven otherwise. What do I mean by proven otherwise? For instance, instead of that particular key level sponsoring buys to the upside, we then see that particular key level gets disrespected or got broken to the downside. We then don't want to look for buys. We are now ready for price to sell, right? We don't want to see price return back to this particular same key level that we wanted to use for buys. Then we want to see price sponsor sales to the downside, right? So same thing for the bearish open close. I'm sorry, the color is same thing, I'm sorry for that, right? So same thing for the bearish open close key level. Bearish open close key level is a key level that is supposed to be used for sales, right? Normally it is a key level that we use for sales, right? So we want to see price come to this particular key level, then sponsor some sales to the downside. But in a case whereby this key level gets disrespected, that doesn't mean that it cannot be used otherwise. Are you getting it? So in a case whereby we see price come back to this particular key level, instead of sponsoring sales, this key level gets disrespected. The thing is that, or the stuff is that, this key level is no longer valid for sales. As the name implies, bearish open close. It is no longer valid for sales, but it is now valid for buys. So it's more like it disrespects the bearishness, and respects the bullishness. Are you getting it? So it gets disrespected, breaks and close above with an impulsive candle. Take note, impulsive candle. Then we want to see price come back to this particular level to sponsor somewhat buys to the upside. As simple as that. So I want to reiterate, I said we have three types of key levels, right? I said we have three types of key levels. I said we have the A-shaped key levels, we have the V-shaped key levels, we have the open close key level, which can be divided into two, bullish and bearish open close. The A-shaped key level is a key level that we use for sales in the market, right? Then the V-shaped key level is a key level that we use for buys in the market. Then the open close key level, which is the bullish open close and the bearish open close. The bullish open close is used for buys and the bearish open close is used for sales. So for an A-shaped key level, when it is proven otherwise, we don't want to use it for sales as it is normally used for. We don't want to use it for sales. We then want to look at price in the opposite direction. Then for the V-shaped key level, which is normally used for buys in the market, when it gets disrespected, when it is proven otherwise, we don't want to look for buys. We then want to look for sales in the other direction. Then same thing implies for the bullish and the bearish open close key level. It is as simple as that, as simple as ABC. So let's go on the charts. Let me show you some chart examples of A-shaped key level, V-shaped key levels, then open close key levels, right? All right, so when marking your key levels, right, I want you to understand this. When marking your key levels, we use align charts to mark our key levels, but for me, I actually understand how a key level is. Once you understand how a key level is formed, right, you don't need to go on the lines chart to look for your A shape, your V shape key level, because you are now very, very good with it and you understand how these things formed, right? So once I look at the chart now, I'll see that this particular level is a V-shaped key level. I said a V-shaped key level is formed by okay, I'm supposed to talk about the A-shaped key level first. All right, for the A-shaped key level first, I said an A-shaped key level is formed by a bullish and what, a bearish candle, right? A bullish candle to the upside, then a bearish candle to the downside. So if you look at this particular level, you see that this level is an A-shaped key level. And what do I say an A-shaped key level is used for? An A-shaped key level is a key level that is used for sales. Let's go to the line chart and see something. Are you seeing it? Are you seeing it? Are you seeing where I marked? That's an A-shaped key levels. But for me, I actually don't need to go on the line chart to know whether it's an A-shaped key level or not, because I know the idea. I know how an A-shaped key level is formed. Once you understand that an A-shaped key level is formed by a bullish candle to the upside, then a bearish candle to the downside, you don't need to go on the line chart, right? So that's an A-shaped key level. What do you see price do? You just saw price tapped into that particular A-shaped key level, then it sponsored sales to the downside. That's an A-shaped key level, right? So let me look for more chart examples on A-shaped key levels. More chart examples on A-shaped key. Yeah, I just got so many here, right? So this is an A-shaped key level also. This particular level is an A-shaped key level. This is an A-shaped key level. This is an A-shaped key level. This is an A-shaped key level. These things, you could see them multiple. They are repeatable. They are stuff that are repeatable in the market, right? What do you see from this particular first one we marked? Okay, let's go to the line chart and check. What do you see? That's an A-shaped key level, right? This other level is an A-shaped key level. This other one is an A-shaped key level. This one is an A-shaped key level. You could see that these levels were actually used for sales in the market. Immediately price tapped into this A-shaped key level, it sponsored sales to the downside. Same thing for this one. Price tapped into it and it sponsored sales to the downside. Same thing here. Price tapped into it and it sponsored sales to the downside. So that's basically what an A-shaped key level is used for. So in my next video, I will talk about disrespected key level. For instance, you are expecting an A-shaped key level to sponsor sales, but it gets broken by an impulsive candle and it's closed with a body above that level. So we want to see price return back to that level. Then we don't want to see price use it for sales any longer, but it is now going to be valid for what? Buys. Do you get it now? So that's how an A-shaped key level works, or that is a chart example of an A-shaped key level. I could show you repeatedly. I could repeatedly show you A-shaped key levels in the market, how this stuff works, how this stuff actually works, how price uses this level to sponsor sales to the downside. I could show you more chart examples, but I don't want this video to be long. This is an A-shaped key level here. This is an A-shaped key level. This particular level is an A-shaped key levels. A-shaped key level. Right? That's an A-shaped key level. Then for the V-shaped key level, the V-shaped key level, we already know what the V-shaped key level is used for. It is used for buys until it is proven otherwise. A V-shaped key level is formed by what? A bearish candle to the downside, then a bullish candle to the upside. What do you see here? This is a V-shaped key level. This is a V-shaped key level. This particular level is a V-shaped key level. Let's go on the line chart and see. That is a V-shaped key level. That's a V-shaped key level, right? This particular level also, yeah, that sponsored buys to the upside is a V-shaped key level. This is a V-shaped key level. Let's go on the line chart and see it. That's a V-shaped key level. You could see what price did there. Price tapped into that particular level. Okay, let's take for instance, you want to buy from this particular V-shaped key level. I know so many things are, oh, so sorry guys, I'm sorry for that particular disturb, right? So for instance, let's say you want to use this particular V-shaped key level for buys, right? So what you want to do is that you want to enter from that particular key level. I know other things are actually put in place, like, and I will talk about this. I will talk about how you could actually use that particular level, the right key level. So it's not all about choosing a key level, whether a V-shaped key level, an A-shaped key level, an open close key level. It's not all about choosing that particular key level, but how do you know that this key level is actually going to sponsor buys or sells to the downside? So all these things are put in place. That's why it is called SLK, structure, liquidity, and key level. All this stuff needs to be put in place before you could know. And price will always react from a key level that is close to liquidity. That is the idea behind it. Price reacts from a key level closer to liquidity, right? So you saw price tapped into that key level, then till this particular external range liquidity was taken, right? So till that particular external range liquidity was taken. That's for a V-shaped key level that was used for what? Buys. I could show you this stuff repeatedly. V-shaped key level from this particular level, V-shaped key level, V-shaped key level. This stuff works like magic. It works like magic. V-shaped key level, right? I could show you repeated chart examples. V-shaped key level. This is an A-shaped key level also. This is an A-shaped key level also. This is an A-shaped key level also. Although price didn't tap into the level, right? That's an A-shaped key level. So that's that for that, right? Then for the bullish, I saw examples of bullish. Don't worry, anyone I see, I'll just show you. Whether it's bullish open close or bearish open close, I'm going to show you, right? I'm going to show you. Okay, just like what I talked about, you saw that. What did I tell you? I said a bullish open close is used for what? For buys. A bullish open close is used for buys, but when it gets disrespected with an impulsive candle, then it is now valid for sales, just like this. So we're expecting price to come and tap into this key level to buy to the upside, but what we saw was that price actually came, reacted from that key level, and closed below with an impulsive move, right? So we now expect that key level to no longer be valid for buys but to be used for sales. So that's what price actually did here, then sponsored sales to the downside. But this is not a video where I'll be talking about that, right? Okay, this is a bullish open close key level that was actually used for buys. Bullish open close key level, sponsored buys. You could see the move to the upside, the gigantic move to the upside, until this particular high was taken, right? Until this particular high was taken. You could see it, right? Until that high was taken. So you could place your limit orders, you could place your orders from this particular level. You could place it from this particular level. Your SL maybe a bit below that level, a bit below the key level, then you take profit at this particular level, right? So that's how this stuff works. Dude, it works like magic. So all you need to do is just go on the chart, go and backtest this stuff, right? Go and backtest this stuff, right? So for the bearish open close, I'm actually looking for a key level that sponsored sales, right? Okay, this is one example for that. You could see 2 consecutive bearish candle to the downside created a bearish open close. So price came back to that bearish level and sponsored sales, a little bit of sales to the downside, right? So the reason why this sales was not actually long was because I told you need to put some things in place. If price is bearish, you want to sell, right? If price is bullish, you want to buy. But actually price was bullish, so that was why it sponsored some sales. It gave a little bit of room for sellers, and this was a pullback, right? This was a pullback to just give sellers some breathing room to close their positions. Are you getting it now? So that buyers can actually push price or continue pushing price to the upside, right? So that's for the bearish open close. I need more examples on bearish open close. Let's see. I think I saw some examples. Okay, bullish open close here also. Bullish open close here. Bullish open close at that particular level. I'm seeing much more examples on bullish open close. I'm sorry, when I see on bearish open close, I'll show you bullish open close sponsored buys to the upside, right? Oh my god, what am I not seeing on bearish open close? So if you go, actually, I don't want this video to be long, but if you go onto the chart, you see examples of both bullish open close, bearish open close, E-shaped key levels, right? So same thing here, in as much as, okay, same thing here, bearish open close, same thing here, bearish open close, sponsored some sales to the downside. All right, so I want to explain something for you. Most of the time, or sometimes, let me not use most of the time, let's say sometimes, let's say for example, this is a V-shaped key level, right? This is a V-shaped key level, and this particular V-shaped key level is a key level we want to see price buy from, right? We want to see price buy from that V-shaped key level. So some of the times, the way price approaches your key level, right, matters a lot. Some of the time, the way price approaches your key level. So in some instance, price approaches your key level with a trend-like format or a trend-like form. So you see price is actually bullish, but price is creating a series of lower highs and lower lows to your key level, right? So it then form it engineers its liquidity, or it engineers liquidity at this particular level, right? Then this particular V-shaped key level, it now makes this particular V-shaped key level very valid for buys. Then our target will be this particular high, right? So price actually moved from internal range liquidity, right? From internal range liquidity to target external range liquidity. So price expanded after taking out internal range liquidity. So some of the times you see your V-shaped key level presented to you in this particular format, while some of the time you also see your V-shaped key level presented to you in a range format. For example, you see your V-shaped key level. There are so many ways your key level can be presented to you that will make that particular key level a much more valid key level, right, to use. So you then see price approach your key level in a range form, right? You see price come close to this particular key level, then you see price start ranging. You see price start ranging closer to that particular key level. So this is actually telling you that that key level is going to be valid for either buys or sells. So you see price ranging, right? There are two ways you could actually trade this particular range key level. If you watch my other videos, you see that I explained how you could trade these particular levels, right? So I told you how you could trade these particular levels. Number one, you need to mark the range low and mark the range high also, right? Because these levels are actually target points. These are liquidity levels. Price is actually generating liquidity so that it could fuel it to either the upside or the downside, and this works with the direction of the trend, the overall direction of the trend. So what we want to see price do is, because price is bullish, we want to see price buy from our V-shaped key level. So we want to see price run through this particular low, right, and come to this particular key level, respect it, react from it. Then we want to see price target our range high or our external range liquidity. So you could see price, even this also happens. Let me invert the scale. On the bearish, for a bearish scenario, same thing for a bearish scenario, right? For an A-shaped key level, price approaches your level like in the trend like format, forms internal liquidity closer to that A-shaped key level, then take out the A-shaped key level, react from take out the internal liquidity, react from the key level, then sponsor sells down or expand down to the external liquidity. Same thing for the range like format, right? You want to see price range in between your key level and the external liquidity, right? So but you don't want to see price react from your key level first of all, right? So you mark your range high, your range low, you see price take the range high, then target the range low or the external liquidity. So this is how you could see price present itself in the market. I would have shown you some chart examples, but there is no time for that. It's already 37 minutes, right? This video is already 37 minutes. So peace and love. I will see you on the next video where I will be talking about disrespected key level. Peace and love, guys. Peace and love.